Hello guys, my name is Colin and this is Colin Talks Crypto. I wanted to bring you an update in the apparent predictive correlative relationship between the global M2 money supply and the Bitcoin price. It's as if we have a clue into the future what the Bitcoin price is going to be doing based on what the global M2 money supply has already done. A little time has elapsed since our last video and I'm going to give us an update on the things that have changed since then. Now, before we begin, I want to just do this for the new people, a couple of quick notes. And I want to urge you to watch my last video for a full in-depth dive with all the answers to many of your questions. If you ask questions that have already been answered, I'm going to refer you to the video that they came from. But I do want to touch upon these three most common points here because they come up a lot and it's really quick to dispel them. So first of all, we're using the global M2 aggregate, which is this yellow line on this chart, and not just the United States M2, because Bitcoin is a global asset. And because, as we've seen here with the correlation math, the Bitcoin price is correlated to the global M2 injections of liquidity, not just the United States. If you chart the United States M2, it does not look even close to as helpful as this. So it is the global M2 money supply we use because Bitcoin is a global asset. Secondly, the chart you're looking at here for new people, I understand if it's a bit much to take in at first, but we have an orange line for Bitcoin and we have this global M2 money supply line, which is the yellow line. And the most common misconception is that how do you have all this future data here on the global M2 line? And the answer is it's not future data. This is the actual M2 data that has occurred globally. This is real data. It's simply pushed forward by, in this case, 108 days, where it aligns with the Bitcoin price and thereby allows us to see what might be happening in the future. But that M2 data is real data. It has already happened. So I want to point that out at the beginning. This is real data pushed forward, and that is what it seems that the Bitcoin price tends to follow. It's really quite uncanny. And I've explained theories on why that could be in past videos. So again, if you haven't watched those past videos, please do. And for those who nitpick on the offset that I use or that it's changed, I've addressed this many times, but my simple answer is that, a lot of analysis has gone into arriving at this current 108-day offset. I spent many hours looking over the figures, doing comparisons, part of which is making this table that shows us the correlation in different time spans of the M2 global money supply versus Bitcoin. And quite simply, I didn't have these tools at the beginning, and I didn't have a lot of community feedback at the beginning. And so as a group, we have evolved this, I think, much more accurate and higher truth of the relationship of the global M2 money supply as it relates to Bitcoin price movements. And to be honest, I do feel that this 108-day offset has stabilized very much so. It's not that it's never going to change. And one of the discoveries that we've made here is that it does seem that the offset itself changes through time. So it's not always 108 days. I would say that it appears that over the past 2 or 3 years, it's been anywhere from 70 days to 110 days. That seems to be the rough range in which it is. But right now it's 108 days. So it's not that it's never going to change, but I do think it's going to change a lot less than it has in the past. I started with 46, which was way off. Then I went to like 77, which was better, but honestly not that great. I still keep an open mind to 70 to 77 range of offset because it could be the case. But I think that visually and mathematically, the 108 days is rock solid. And honestly, we really proved that recently. We had a real big victory here because I was really holding to my guns and putting myself out there. And I said, you know what? I think 108 days is it. And I said that back here before this mini rally that fails, as you can see right here. And I kept to it because that's what the math was showing me. And I just said, you know what, let's go with what the numbers say. And I was really pleased to see that it followed this. It blew me away, I think, as it did many of you, that Bitcoin's price right here followed almost to a T. Even the minor sub patterns for most of this move mirrored to the T of what the global M2 was doing. and all the way back down to this low, basically here around April 5th or April 6th. So that was very confirming that this hypothesis was probably correct, that 108 days is pretty accurate here to use. So now where does that put us? We're in this sort of sideways period. I'm looking at the yellow line right here. If we delete this little box, you can see that there's sort of this sideways period with a little, some people are calling it like a micro rally, sort of similar in shape or in structure to this previous rally, but much smaller. So I wouldn't put a lot of weight into that. Yeah, we might get a pump of a couple $1,000s. Great, that's awesome. But it looks like the real blast off doesn't start until essentially May 2025 for a solid 2 months. The global liquidity injected into risk assets. That's how long it takes for it to find its way into the risk assets. And remember, the M2 has already happened. So we're just waiting for it to trickle through the economy and through the countries and find its way into Bitcoin and the stocks, etc. And it's going to last for about 2 months from here to here. Then there's sort of a sideways period where it chops. And we've had many of these in Bitcoin, that last several months long. It looks like this one is about a month long. And what happens after that sideways chop, sort of a corrective phase, if you will, is another massive climb up. And that's what the most recent M2 data shows us. As of the last 3 days in a row, we've had a plateau. I'm really glad to see that it didn't just plummet back down as it did right here. It's actually held this for 3 days in a row, this highest ever all-time high of global M2. So I think that this actually could be perhaps either the next leg up after this 2-month leg up, or this could be a blow off top, that kind of a thing. So we just covered this first bullet point that the global M2 has remained at an all-time high for 3 days in a row now. And this is a fantastic sign for what it signals will be coming into risk assets in approximately 108 days. Just as a side note, I tend to take the first moment of the vertical ascent as the blow off top range, as maybe where I would take profits, versus like here as opposed to here. This, I feel like there's a momentum that takes place. And if you have sideways M2, that can tend to be a bleeding period. You don't want to wait through a bleeding period. And when M2 drops, that has proven to be quite detrimental to the Bitcoin price as well. So this move right here, this is basically, let's get the date on this, July 25th through July 28th, approximately. And there's no telling if it doesn't take another huge leg up, right? This is just the data we have so far. Every day that goes by, we get one more day of data with which to look into the future, that 108 days offset. But I would say that this steep move right here will probably coincide with a risk asset surge, like a pump. And then probably it'll be overbought, is my guess. And over the coming days where this goes sideways, the market will probably correct down. So that's how I'm trying to explain that, when I see the structure of the move up like this, that first impulse is where, if you're going to take profits, is probably the smartest place to take profits. I don't see the high being 3 days later here. I don't see it dropping a lot, but I think that if you want that impulse blow off top type profit taking, that's where you would take it, as that first move. Just like right around here or maybe right here. I wouldn't necessarily even wait for here. Like, yeah, sure, it's a little higher, but that impulse move, and this is just my hypothesis. Like, I haven't spent a lot of time proving this out. My theory, let's say it's my theory, is that this might be a better place to take profits than something that's slightly higher, but that has allowed a lot more time decay to occur where the price can perhaps bleed or do other things. Also, you'll notice that I have this red arrow here labeled April 17th, and that's the bottom of this little drop in global liquidity or global M2 money supply. And I'm just positing, I have a thesis that perhaps the Bitcoin price, did have this big move up here, perhaps a little overextended, might need to correct back down. And I think that in April 16th, 17th, somewhere in the next week, we may see a lower price. I don't think it will last for long, but it may give us an opportunity for a last buy of assets before the May blast off occurs. So that's why I labeled April 17th. It really could be any of these days though. It could be April 14th, 15th, 16th, 17th. They're all pretty similar here. It'll be interesting to see what happens on Monday, tomorrow, when the market opens. I think there's a chance that we could see a drop. And if so, then maybe I'll get my chance to buy some of the assets I've been eyeballing. But that's really the micromanagement of it. And we try not to do that too much. I'm just throwing that out there as a point of interest. But really, you step back and it's really this sideways period that I'm looking at from now till May, with some chop, with a little micro rally, whatever. But the blast off, I think, still is going to come in May. I don't think it's coming tomorrow or next week. Willing to be wrong, absolutely. So that's this section here, dip buying opportunity. I think that possibly we could see next week providing us with another dip buying opportunity before the big blast off occurs. Okay, so that's where we're at currently. We're at this sideways bleeding period, question mark. We're seeing if it's going to follow. There's been a lot of volatility here, as you can see, so much so that every time there's some volatility, people get questioning about, oh, is this really the 70-day offset? And so I wrote something and I addressed that right here in this section down here. And I'll just read this to you guys. I see an inclination by some people to shift opinion every time there is a short-term price movement. Global M2 money supply is a macro chart. Thus, it's best to view it as such and to have patience, not to change one's analysis with each small price movement. This is backed up by the fact that global M2 will deviate 20% of the time by mathematical correlation. That's what this chart is here. It's not 100%. So no, we will not see 100% correlation. Therefore, by definition, and this is hard for some people to conceptualize, I guess, and expect, we will see a 20% non-correlated period from time to time. That's 1 out of 5 days, for example. And so I think it's important to zoom out and not be suckered into accepting these non-correlated periods as the average. It's easy to be tricked, and people, a lot of newbies, I think, will be easily fooled into wanting to change their opinion every day that they see the Bitcoin price do something that's a little more bullish or a little more bearish than the M2 might suggest. And I think that that's a mistake. I think that you should not be suckered into accepting these short-term price deviations as the average, because there will be a 20% deviation by definition. Furthermore, we just proved over an extended period of time of several weeks that the 108-day offset was accurate via the mini rally that fails, which is right here, check mark. And again, I drew this box and I posited this as what might happen before it happened, and it played out. So it was accurate. And that was big. That was a big call for me. I put my neck out on the line saying that I think that's what's going to happen. And it turns out that the doubters were incorrect. A lot of people were saying 77 is right. That majority of people were incorrect and that the math was correct. And so that was a real good confirmation that the 108 days was correct, which was nice to see after all that work we put into it. So in summary, really, I haven't seen enough proof to say that the 108-day offset is wrong. And it's fine if it does change. That's totally fine. Like I said, it does shift gradually through time. And I will take a look from week to week and shift accordingly to fit the best fit. But I'm not being too quick at the same time to jump to the conclusion that it's a failed offset, because we're going to see a 20% discorrelation. That is going to happen, and you can't be fooled by that. So I say, let's give it a week or two to play out, and let's evaluate it then. In summary, I wouldn't be too quick to judge the M2 offset on each short-term Bitcoin price movement. And to the broader picture, and the real important point that I keep driving home here, is it doesn't matter what the offset is within a span of a week or 2 or even 3 weeks. It's really not that big of a deal. The big deal is this gigantic move up. This is the crazy move that we're keeping our eyes on. This is what honestly has been, as I've heard from many of you, and I can speak for myself, the thing that gives me hope that we're not just in a bear market right now. Like, it's been very, very difficult to hold through this period, which I have done. And this is a big part of the reason why I felt at least comfortable thinking there's hope that we could go up further. Because if you look at it, the magnitude of this global M2 run up from here to here, I mean, it's enormous. It's actually on par now with this move from here to here, from October 13th approximately to January. And during that time, we saw a $40,000 to $50,000 pump in the Bitcoin price from here to here. And I think that that is what we're going to see. I think we're going to see something similar to that. It's a directional correlation. It's not a magnitudinal correlation, but it does give us an idea that the direction is up. I would find it a miracle if Bitcoin did not follow at least part of, or maybe 80% of, this gigantic M2 move upward. I think that that would be nearly impossible for risk assets to ignore all of this. Sure, they might deviate for some of it. As we've discussed, it's discorrelated for, or decorrelated for about 20% of the time. But for risk assets, including Bitcoin, cryptocurrency, altcoins, to ignore all of this, I don't think so. I think we're going to get a tremendous move up. And I'm putting my money where my mouth is because I'm long. I'm long all my assets right now. I haven't sold. So I'm here putting my money where my mouth is. Could I be wrong? Absolutely. Like, I am not infallible, but you got to make a bet at the end of the day. You know, you're either in the market or you're out of the market. And I'm in the market based on this largely. So I have hopes that May is going to be an incredible blast off. And I wanted to share some other things with you that are also bullish. So this is the Fed president, the Federal Reserve president, Neil Kashkari. And, you know, back in 2020, he said this video down here, which I'll share with you in a moment. But just 2 days ago, he said the Fed has tools to provide more liquidity. The Fed is signaling liquidity right now, guys, on top of what's already happened on the global M2 chart. So, like, they're not trying to tighten more. They're signaling they're willing to buy assets. This is code for simply saying we're going to buy stocks. They're going to pump risk assets. So we have the money printers on our side. No country can resist the money printers for long. That is, I would say, humanity's weakness. One of humanity's weaknesses is it cannot resist printing free money. And if America doesn't do it, other countries will. And like we've shown, Bitcoin is a globally correlated asset. So this is the Fed of the USA saying he's going to signal liquidity. This is what he said in 2020, just to give you a feeling for the wild, untamed money printing willingness of the Fed.
Your ATM is safe. Your banks are safe. There's enough cash in the financial system. And there is an infinite amount of cash at the Federal Reserve. An infinite amount of cash at the Federal Reserve.
An infinite amount of cash at the Federal Reserve.
Don't you want somebody to love? Don't you need somebody?
Okay, so if that's not crazy, I don't know what is, but he's on our side, basically. And one last thing of interest, some of you have wondered, how does gold correlate to Bitcoin and global M2? Interestingly enough, gold is very similar to global M2. It's also very similar to an inverted Dixie, DXY, which is the United States dollar strength compared to a basket of other currencies. The inverted DXY is similar to gold, is similar to global M2. There's no offset applied to these two charts. So you can see that M2 is just slightly ahead of gold here, or I would say pretty much tied with it the whole time, because there's going to be deviations, right? So gold is very interestingly another metric that corroborates the global M2 movements, as is the inverted DXY chart. I don't have that here, but you can check that out. And so Bitcoin also historically tends to follow gold's moves. Well, gold is moving up to all-time highs after all-time highs. It's going vertical right now, as is global M2. So every sign that we have here, including the Fed itself, is pointing to a massive influx of capital in the United States and internationally for one of the most tremendous next legs up of the Bitcoin bull run. And I wanted to mention that if you're not following me on X, my username is @ColinTCrypto. That's one L. That's where I make posts every day, basically, on the subject of the global M2 money supply and its correlation to Bitcoin, as well as other charts and metrics related to cryptocurrency and Bitcoin. So if you're not following me on X, you are missing content. Have a great day. Talk to you again soon.
There's an infinite amount of cash at the Federal Reserve. An infinite amount of cash at the Federal Reserve.
An infinite amount of cash at the Federal Reserve.
Don't you want